If you have been studying macroeconomics or you're following one of the macro geeks like myself, you know that we talk about yield curve quite a lot of time. And the reason is yield curve is one of the best indicator in terms of predicting the recession or economic crisis coming ahead, because 9 out of 10 times in the history it has proven that whenever the yield curve gets inverted and it gets uninverted after that, it is always followed by a recession, a economic crisis. That has been proven 9 out of 10 times in the recent history. So by all standards, the yield curve is the best economic indicator to predict an economic crisis. What it doesn't tell you is when the recession will hit after it gets inverted, but most of the time when we study that, it looks like whenever it gets uninverted after getting inverted, this is when the stuff hits the fan, and this is when we see an economic crisis resulting in from another crisis. For example, it could be a mortgage-backed security issue, or it could be banking crisis, it could be housing crisis, which will drive the economic crisis further down the road. We can call it recession or economic depression, whatever it could be. But yield curve has been one of the best indicator. So the question is, you can hear about yield curve from pretty much all the major economists and macro geeks, but nobody tells you that why this is so good, why this gives you so accurate predictability about recession. What happens, what triggers the yield curve to get inverted at first place? So in this video we're going to talk about that, and I'll try to explain based upon some of the news events that could perhaps become a catalyst for yield curve to get inverted. So let me show you what I'm talking about. So if you look at this news, so this news is about the insider trading that all the congressmen and US politicians have been making based upon the information that they get, which nobody gets before them. So Senator Richard Burr, so he's accused, so this is a confirmed story, so he's accused and he has admitted that he was running a committee that was supposed to debrief him about the coronavirus way earlier than it was covered by the mainstream media. So this is something around early 2019 time. So he was the one given the information about the coronavirus happening and spreading out of China, and once he was informed about that, immediately he has made his stock trades, and he sold around 2.5 million worth of stocks back then. And then what he did the next is he put his cash into US Treasury. This is the key, guys, because what will make you sell your stocks and buy treasuries? Why? Because you know that at some point in the near future the stock market may run into a crisis, or it may crash, and then there will be a demand for short-term bonds, because Federal Reserve may jump into buying those government bonds especially on the short end of the curve. So when these insiders, they get the news way before the mainstream media hear about that, forget about the retail investors, they make their trades based upon that information. And when you buy those treasuries, it increases the demand of those bonds, which will actually reduce the yields. Okay, so if you start buying long end of the curve, then it will actually start pushing the yields down, and this makes the yield curve inverted. So when these investors start buying long end of the treasuries, it starts pushing the yield down. Okay, in a normal yield curve, you have the short-term yield lower compared to the longer-term bond yields. Okay, so that should be the normal curve in a normal economic situation. But when this kind of events are predicted to be happened, then what happens is the investor like Senator Burr or other key investors who have the first-hand knowledge of these events, they start buying the long end of the curve, and that will actually push the yield down for the long-term duration bonds. That makes the yield curve inverted. Okay, so let me show you one more thing. So this news is basically Paul Tudor Jones, one of the legendary investor hedge fund owners. He might have billions of dollars under his asset management. So he made some statements in January at Davos, and he said that there is no vaccine, it's spreading like wildfire, and nobody knows what will be the extent of that spread. As an investor, he would be very, very cautious. Okay, so these people have this level of information way before anybody in the mainstream media or in the retail investor world. So let me show you something more. So this is the 10-year treasury minus 3 months treasury yield chart. It's a yield curve. Okay, so you can see back in 2019, sometime around August timeframe, right? July, August timeframe. This is when the yield curve starts getting inverted. So this is when the key insiders, they knew about that, and they start buying long-term treasury yields, which actually push the yields down, and the yield curve gets inverted. You may say that, hey, this could be related to the repo spike that happened in September 19. Maybe, yes, maybe it is related to that. And it could be related to the same story that I'm trying to explain to you. If that was the case, maybe those investors who knew this insider information, that may have been passed on to the banks, and banks were, becoming more cautious about, exchanging collateral with cash, right? So that could be linked to it. I don't have any valid proof that this really exactly happened. What I'm trying to do is I'm trying to connect the dots based upon the available, news, and that could prove us, that could lead us to a conclusion where maybe this could be true. Maybe these insiders, like Paul Tudor Jones, like Michael Burry, like George Soros, like Bill Gates, like the Senator Burr, they have information about a economic crisis or a health issue like SARS or COVID-19 or mortgage-backed securities. They know that information way ahead of the mainstream media or the retail investors. So based on that information, they start placing their trades, and then that actually pushes the yield curve getting inverted, because the smart money, the big money, is making trades based upon they know what we don't know. And that explains why the yield curve gets inverted in advance of any economic crisis. And we only find out when the recession actually occurred. Okay, so a retail investor always gets trapped into this economic crisis. But the big players like George Soros, like Paul Tudor Jones, like Stan Druckenmiller, like Bill Gates, like the Senator Burr, they know this information way in advance, and they make their trades based upon that. This actually gets reflected, perhaps, in the yield curve inversion. Food for thought. Let me know what you think about that. Do your own research and share with me if you find something interesting as well in the comment section. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Thank you.